Are you thinking about buying or selling a home in 2024? Maybe you're thinking about investing, but you're a bit on the fence for the last 2 years. My name is Spencer Su, and I am a Bay Area real estate agent. And in the last 5 years, I've helped over 200 people with their moves. I've been able to see a lot throughout the years. And what I'm going to do for this video is I'm going to give you a recap as to what happened in the beginning of the year, any inflection points throughout the year, and then where we're at right now, which in the time of this shooting is mid-December. And I'm going to also give you my thoughts of what is likely to happen in the first part of next year. I'm not going to guess what a year is out, because at the end of the day, that is way too far out. There's so many unknowns that can happen, but I will also share with you why things are happening what they are now, and at least what you can expect over the next couple of months. Let's talk about interest rates first, because interest rates is by far the most important thing and the thing that's on everybody's mind on all assets. Stocks, bonds, real estate as an asset class, public valuations of a lot of these venture-backed companies. So if you take a look at the stats, the beginning of the year, general mortgage rates were at 6.42%. They rose to 7.8% about a month and a half ago, and then now they're down to 7.03%. Now, to be fair, these are average numbers. What you will get is likely lower than this. So what I see for jumbo loans right now, low sixes, even conforming mid sixes. So to be fair, yours is going to be better than this, but this is an average. So it gives you an idea of where things are. The most important part about this side of it is that rates have been going down. Now, I don't know how much further it will go down, but likely it will continue to go down as there's more hope and there's more probability that the Fed may not just stop increasing rates, but they may actually cut rates sooner than expected. That's why you've seen such a drastic change in not long ago. That impacts all things. Take a look at the stock market though. When people think they can time a market, most people are fools about that. Because if you were very smart at timing the market, did you go all in on the S&P in the beginning of the year? Did you go all in on tech stocks because they got destroyed? I personally didn't. I was fearful. That was the sentiment. When everybody is fearful, that was actually the best time to go in. Let's take a look at it. The S&P market went from 38.24 to 46.04 at the time of this recording. Increase of 20%. NASDAQ went from 10,386 to 14,403. Increase of 38%. So what are some lessons learned? People have more money than ever before. They've not only made a lot of money if they kept their money in the stocks, but they also earn an incredible amount of money just by keeping their money in the money market account. Very, very important thing for most people to understand, that people that have been able to save, which has been plentiful, have more money now than they did a few years ago. It's not being reported that much. You probably did not know the markets did that well. Now let's talk about housing. Housing in general has increased throughout the year. Now right now, because of the November, December, winter holidays, prices are lower than the previous months. But in general, prices have done very well. So if you look at the beginning of the year versus now, prices have gone up about 8%. That's a mix, single family, condos, townhomes, and that's a mix of all the kind of main counties in the Bay Area. So that gives you a little bit about the perspective of things. What's likely to happen moving forward? The only thing you need to think about is it's going to be chaotic. Why is that? There's going to be a lot of good news and a lot of bad news. And there's going to be a lot of random news. It's election year. This is one of the most important elections, at least is dubbed that way, of the US in general. Will Biden rerun? Will Trump be the Republican nominee? Are there others that can get into the picture and get into the mix? Lots of unknowns. The polls change daily. It's up to you if you want to keep focusing and thinking that you can predict elections and predict with how things are this far out. The other thing is rates have been going down. Look at the inflation numbers. Inflation has significantly improved. Why is that? Jobs are lower now than before. There's still a lot of open jobs, but jobs are significantly lower. Interest rates have continued to go lower. The Fed may cut rates. That may help a lot of sectors. The Fed fund rate does not impact the 10-year treasury yield, which is the one that ultimately impacts the mortgages, because the 10-year treasury yield is also based off of confidence. So you're going to hear both emotions. So it depends on what side you're at. So focus on your own individual circumstances. Cut all the noise out. And what are individual circumstances? You got to move for schools. You got a new bigger place. You're tired of wasting money on rent. These are all personal things. So as long as the math and it's suitable for you in your life, then you can progress forward with the next steps on finding a place that's suitable. I wouldn't say to go all in on a home, but you should still probably go for something that can work for you and for your budget to get you to that next milestone. And then down the road, you can reassess, save money, reassess, sell that place, or rent it out, buy a new one. And that's what a lot of people have done over the years, and that's what they're doing today. Now, what you'll also see is potentially some other silent cuts and layoffs. A lot of these big companies, they are making a lot of money, but they're going to continue to shred it quietly. I don't think we're going to have too many drastic layoffs per se, but this whole idea of silent cuts and layoffs can probably still happen. Natural attrition, natural people that want to switch and leave jobs. Don't be surprised if you're going to keep seeing those metrics happen. But at the same time, there's also a lot of companies that are continuing to hire and bring on people. Take a look at ByteDance. Take a look at Samsung. Take a look at a lot of AI companies. The key, as you can see, is there's going to be lots of conflicting things. I'm going to point something out that you may not like to hear. When things are about to rise again, whether it's prices, whether it's interest rates, there's a lot of momentum for that. But also when things are dropping in terms of interest rates. When interest rates are dropping, the mentality of a lot of people, and rightfully so, I have a lot of smart people looking in Hillsborough for $4 million plus. They're like, look, I'm in finance, I'm in investment making, I'm in Wall Street. I think there's going to be a lot of people that want to buy, so I would rather try to buy now than try to buy later. The later will be a lot of frenzy of all those people that jumped back onto the market. As long as people didn't force sell on the bottom and they were just keeping stocks or they were saving, they would have more money now than they had before. Their motivational reasons for moving has not changed, but now they have the confidence to try to get back in, especially rates are reversing. And if rates keep dropping, just refinance later on. There's no restriction for you to refinance later on. That's the big thing. A lot of people are saying, look, the rates are going down and they have already gone down by 1%. Would you rather wait for rates to drop even more and then have even more buyers get into the market? Or would you try to actively look now, which is the slower time of the year, find a nice place, get into a place with a little bit less competition, and then if rates do drop, refinance. When rates were really low throughout the years, do you think buyers just timed the market for low rates? No. Most people were homeowners, and as rates drop, they just refinance for free. And if rates keep dropping, refinance again for free. So that's the logic of that has occurred, and that's something that you need to be mindful of as to timing the market. Do what's best for you. Ignore a lot of the media outlet and noise. You're going to see a lot of stuff out there, good and bad. Focus on your own goals. See what works, but the good news is rates have been going down, and that has been helping a lot of people. Whether you're looking to make a move, buy, sell, invest in the Bay Area or out of the area, I would love to be your trusted real estate resource. Contact me with my details below or schedule a time to talk, and I'd love to go over a game plan together. See you in the next video.